Welcome back. Our goal number 3 is to be able to determine the cost of inventory under the 3 different types of inventory costing methods we discussed in the previous section. So we're going to start with some examples here. First in, first out. Remember, that means the first item we purchase, the one furthest away from today's date, is the first item we're going to sell. So we make an assumption on January 1st that a firm had 100 units of item 127B that cost $20 per unit. This chart you'll see in your notes. Please fill it in as you continue along. So on January 4th, the firm sold 70 units on account of 127B at $30 each. So if we're making a sale of 70 units, we're going to be selling some of these 100 units. It's the only purchase we've made. So the cost of each one of those units is what? You guessed it, $20. We take a look at the next part of your notes. It asks you to make a journal entry. Please attempt a journal entry to sell 70 units on account of $137. The sale price is $30 each. The cost of merchandise sold is $20. Please record the journal entry. This is a basic entry we've done numerous times. If you take a look at it, our accounts receivable are going to go up because we sold it on account. They owe us $2,100. Where did I get $2,100? Well, it's 70 units times $30. That's $2,100. $2,100 debit to accounts receivable. Our asset is going up. And a $2,100 credit to sales. We also always have a second entry as a merchandising business for sales. We have to record our cost of merchandise sold, which remember acts as an expense. Expenses increase with debits. We had a higher cost of merchandise sold because more merchandise was sold. The cost of merchandise sold is debited for $1,400. Our merchandise inventory is credited or reduced for $1,400. Where did I get $1,400? It's the 70 units times the cost of $20 from our chart. What method are we using? First in, first out. So all of these units must be sold before we make more units or sell other units. We still have 30 units to sell at the cost of $20. Keep that in mind. You may want to write that down. So we have the 100 minus our 70. We have 30 units left to sell at $20. Keep that in mind. That's probably the most difficult part of this section, is keeping track of what has and has not been sold. So here's our entry. You'll see we have a ledger here for item 127B, which is keeping track of that as well. So we have 30 left now in that ledger. Take a look at our next one. We've now made a purchase on January 10th, 80 more units at $21 each. Here is our purchase, 80 units, $21 each. So in total, if we think about our previous slide, we had 30 units left here. Those 30 units cost $21 or $20. Our 80 units cost $21. How many units do we have in total? 80 plus 30. We have 110 units to sell, but at different prices. Here is our purchase. Our merchandise inventory goes up by $1,680. Our accounts payable also goes up. We purchased, again, 80 units at $21 on account. Here is your journal entry. Please record that. Next, we have another sale of 40 units. Okay, this is where it gets tricky. We sold them for $30 each, but we need to know the cost of merchandise sold. If we look back and think about what we did before, we had 70 or 100 units at $20. We sold 70, so that means we have 30 units left at $20. We have 80 units left at 21. So if we're selling 40, that means we're going to sell these 30 at $20, and then we're going to have 10 at $21. So make sure you do your math accordingly. Please journalize that entry. Hopefully your journal entry looks like this. You've billed them for $1,200 worth of items, and you have a sale of $1,200. To record our cost of merchandise sold, we need to do some calculations. Our cost of merchandise sold, we sold 40 items. 30 of those were left over from our first 100 that we sold. So 30 at $20 is going to equal $600. Then we have to sell 10 more to meet our 40. 10 of those come from our purchase of 80 at $21. So 10 at $21. We add those items together. We see that our cost of merchandise sold is $810. Next, we have a sale of 20 units on account for $30 each. So we're selling them for $30. These 100 units are already gone. We've already sold those. 70 in the sale, 30 in the sale. So that means, ignore this down here, that means if we had 80 at 21, but we had to sell 10 of those, we have 70 left. We have another sale now of 20 items. Each we have enough of those 70 left, so each item will be valued at $21. Please record the journal entry. Your journal entry is going to look very similar to previous entries. Selling an item on account, and also recording cost of merchandise sold. Accounts receivable, $600, sales, $600. Then our cost of merchandise sold, we're taking 70 at $21 a piece. Our accounts receivable and our sales are 20 at $30 each. Here is your journal entry. Did you do that right? This is adding another step on the previous entries we've done. They used to tell us the cost of merchandise sold. It's the same entry, however, we are calculating the cost of merchandise sold. Another purchase was made of 100 units on account at $22 each. Here's our purchase, 100 units at $22 each. Now remember, we had the purchase of 80, but we sold items from here that left us with 70. Another 40 leaves us with how many units? 30. So out of our 80 units at 21, we have 30 left, and we have a purchase of 100. So we have 130 total. Here is our merchandise inventory and our accounts payable for making the purchase. Merchandise inventory goes up, and our accounts payable goes up as well. We have our cost of merchandise sold being recorded in our ledger for our item. Total cost we've just recorded and added up. Here's our total cost of our inventory itself that we've spent. Cost of merchandise sold. Seeing the totals here, the total cost of merchandise sold is $2,630. Our January 31st inventory is worth $3,250. Your inventory should be more than the cost of merchandise sold. The inventory is valued either at the FIFO, LIFO, or average cost method. The cost of merchandise sold is what we paid for it. These numbers will not match. So let's do one more example. We have a beginning inventory and purchases and sales for an item listed as follows. We're going to use the perpetual inventory system, which is what we've used all along. You're going to use the FIFO method, first in, first out. So we're selling these items first. And we're going to determine the cost of merchandise sold and the inventory on November 30th. If we sell 45 units on November 21st, we have to calculate what's already been used. Selling 32 units from the 40 leaves us with 8 units. So we have 8 units left at $5. We're looking again at the sale on the 21st. We need 45 units. 8 of those are going to be at $5. So there's $40 of cost of merchandise sold. Are you following me? If not, you might want to rewind and review some of the lecture. We still need 37 units to sell. 37 plus the 8. The other 37 units are going to have to come from this purchase. So 37 units at $7. Pulling my calculator out for this one, equals $259. So our cost of merchandise sold is the $259 from that purchase plus the $40 from this purchase, which equals $299. COMS, cost of merchandise sold. The inventory on November 30th, we need to figure out the value for that. So if we sold 37 of these 60 units, we subtract those out, we have 23 units left. That's an E. 23 units left at the $7. Multiplying that out, the value is 161. Let's take a look at the next slide. There is our 45 units that were sold, 5 at $40, 37 at 7. There was our 299 cost of merchandise sold, which we calculated. The second part, our inventory left over, we have 23 units left at $7, which was our $161 that we calculated. That concludes this portion of the lecture. If you are uncertain or unclear, please feel free to review and rewind the lecture. Pause throughout as you need to, fill in your notes, use this to your advantage. I hope this helps. Come to class tomorrow with any questions you may still have.